name's James Nicholson. Welcome to my YouTube channel. In this video, I want to talk about mortgage approvals. They're down at the moment, and this is a leading indicator on what to expect with house prices and the volume of house sales going forward. You see, if less people are getting approved for mortgages, that means there's going to be less buyers in the market going forward. Estate agents are going to get less inquiries, and so this could be the start of a bigger slowdown than we were expecting. I also want to talk about why this is actually a bit of a surprise because of what's happened so far this year. You would have expected a slight uptick, temporarily at least, in mortgage approvals. So before we jump into this, if you're new around here and you haven't done already, do make sure you subscribe to the channel over there and hit the bell notification. We're so close to 50,000 subscribers. If you have a look around, it's a few hundred. Help us get there a little bit sooner. But why subscribe? Well, you'll get all the latest house price news, interest rate news, property investing tips, and much, much more. So make sure you subscribe for that. And let's get some views on this video. How do we do that? Well, your part's simple. All we need to do is smash like, tick or like, do something to that like button. That helps with the YouTube algorithm, and that's really helped the channel grow. So thanks to everyone that does that. So, mortgage approvals. This data is important. It's interesting. We ran this channel now for nearly 4 years. And one of the big criticisms that I used to get was when I talked about asking prices. No one was interested in asking prices because for ages they were going up and people were saying, it's irrelevant. That doesn't mean anything. Well, it does, because that's the market sentiment. That shows that the new listings, what their expectations are. It also shows us how desperate are those sellers. If they're desperate, they're going to be undercutting the listings out there already in order to get the viewings, in order to get those sales as well. But now, asking prices have been coming down this year. So suddenly, everyone thinks that that data is really, really important. I think it's always been important. But another piece of information, can't even get my words out, that is important is mortgage approvals. Because yes, you've got cash buyers in a market, but there's less of them around at the moment. Things are tied up in other assets and people have got uncertainty. So mortgage approvals is a signal to us on how many buyers we could expect to see coming into the market next month and the month after, because you get your mortgage approved and then you go shopping, don't you? Some people go shopping a little earlier, but some people will call the agent, and the agent might only do a viewing if you've got your funding in place. So what's the drop been in August? So this is August data of this year. Now, obviously, I know you're going to say August is quieter. I'm going to tell you why this should have gone up a little bit. July was at 65,161, and this is dropped to 64,680. So it's around 900 approvals down. That's 900 less buyers in the market. Now, why should this have gone up? Well, one big thing happened around this time, and that was a rate cut. So we had a rate cut when I was enjoying myself in France, same as the year before. And so that really was something that was important, that that rate cut happened. And you would expect after an interest rate cut that you would get a load of inquiries. If you're a mortgage broker, at least, you would think, yeah, a rate cut is positive for business. But here's where the problem lies with this. While the Bank of England did cut rates, if you're on a variable rate mortgage or a tracker mortgage, you instantly got the benefits of that. But lenders had already priced this stuff in June and July. So when the Bank of England actually cut rates, we didn't see mortgage rates. Lenders didn't really cut rates. We've had a few, but most lenders since this interest rate cut have actually increased rates. And that's because the rate that they borrow at, which is called the swap rate, actually increased. And so lending to banks like HSBC, NatWest and places like that, since the Bank of England rate went down, has actually got a little bit more expensive. So that's a problem. And the other problem that lenders are saying is really slowing down business at the moment is stamp duty. We've talked about this a lot in the last week or so. A lot of places are saying stamp duty is a nightmare at the moment because in January, February and March, we had that lower stamp duty, didn't we? Excuse me. So we had a lower rate of stamp duty in January, February and March. Then it went up and the market has slowed down. Now, you would understand that the market would adjust to stamp duty. But here's what they're saying the problem is. There's some uncertainty at the moment. And so the government keep leaking ideas on what they're looking to do with stamp duty going forward. So there's two real options that they're considering at the moment. One is that properties over 500 grand get something called a property tax. So that means that you don't get stamp duty. They'd also remove your council tax and you pay an annual fee forever. That's what they do in America. A lot of people don't like that because when you retire, it's terrible. It means you've got a bill that's more expensive than your council tax and you've got to keep paying it when your income has massively reduced in retirement. So that's one thing they're considering on bigger properties. Remember, 500 grand might sound like a lot, but a lot of properties in the south are at that 500 grand level. And eventually, everyone will be as house prices increase. So the other option that they're looking at is the stamp duty in installments. And so you could pay your stamp duty over 2, 3, 4 or 5 years. Now that is a bit more positive. And so there's lots of people, including people that are watching this channel. Let me know if you're one of them in the comments below that are just doing transactions now or considering buying something, but they want to see what's going to happen in the budget in November. So they're waiting and seeing because they like the idea of installments and they rather have that than paying a big lump of money up front. And so that is slowing down the market as well. So I think the mortgage approvals are going to drop again next month. And that means you're going to see less buyers in the market. Now, fortunately for house prices, you're not seeing lots of sellers in the market. That's down as well. There are less sellers listing properties at the moment because they're also looking at what's going to happen. Is this stamp duty stuff going to be the property tax or is it going to be installments or nothing? Like no one knows for sure until this actually happens in November. And so all of this uncertainty is slowing down the market and causing problems. We're seeing it here. What we'll next see is that I think next month we'll see less people approved for mortgages, and that's not good. So let me know what you think about that. That could start pushing house prices down, less buyers out there. Before you go, do make sure you grab a copy of Mortgage Secrets, How to Get the Best Mortgage Deal in 2025. This will teach you when to get a broker, how to get off-market mortgage deals, lenders that aren't online, lenders that aren't with brokers as well. Think of Direct Line for your car insurance and how to structure your mortgage to make it more affordable. It's in the description. Thousands of you have grabbed this already, so do grab a copy while you're here. Do make sure you like the video on your way out and also check out all the other content as well on the channel, including this video right here.